It is employment day after Saturday, Friday. Anyway, Cathie Wood does her thing on Friday night, Saturday morning, and Larry and I, Larry Goldberg, we take a look at what Cathie said and we add what little bits of wisdom that we think we might have to what she said, and we try to review and restate some of her thoughts. Anyway, Larry, we've been doing this for months. It's been very popular. Hopefully, it stays popular after today. Uh, but I thought Cathie, who maybe had been a little off form the last 2 months, maybe concentrating a little too much on other matters.
Yeah,
Uh,
she's committing the crime of running her business.
yeah, right. Yeah, there you go. That's right. And she had also started the videos the last 2 months with other matter that was on her mind, and now she's decided to split that off back as to a separate video. So for those of you who want to watch the original, we encourage that totally to go back and watch Cathie do her presentation. But now she's moved it back to just being about Employment Friday and all the other ramifications of things going on in the economy. So,
Yeah, Employment Friday is important because it gives us a temperature, it gives us a gauge of where the economy is going from the perspective of employment, which is, one of the most important signals that we can get from the economy. And, she teases out those signals very well. She's an incredibly gifted economist. You know, I mean, I don't always agree with her, but I always listen very carefully to her analysis. And then, of course, we add our own, you know, I wouldn't call them wise words. I would call them, old man's ramblings.
well, the difference between Cathie, I mean, Cathie does run a business, but the difference between Cathie and Larry and I, of course, is Larry and I have run multiple businesses on multiple, in Larry's case, on multiple continents, but both of us with a tremendous amount of international business experience as well as domestic United States business experience. His mostly in software, mine in hardware, and in manufacturing. So I think we bring the practical to the table, and maybe sometimes a slightly different perspective.
Yeah, and let's talk thematically about where Cathie is in her head and just think about where we are. And, it'll add color to our view of what we're seeing. And you and I are not always in alignment on these things. um, so Cathie starts by saying, we may have ducked a bullet. Looks like we're not going to have a recession. It looks like we're moving forward. She's very bullish about the new administration. She feels bullish about Doge's opportunity to reduce the deficit or to change the direction of government spending. I am not as optimistic as she is. Not that I doubt Doge's intentions or its skill sets, but I think I don't think the problem lies in the government expenditures, even though they are not well controlled. I think the bulk of the expenditures that are the risk to the country are more those expenditures which are on automatic pilot, and they're not really, a matter of we've hired too many people and we're spending too much money, although we definitely are doing that. But the savings from that department, I think, are going to be relatively limited. The big problem in the future remains our healthcare expenditures and our social security expenditures. Of the two, healthcare are the biggest, because if you go forward over the next 10 years, even if you look at the Congressional Budget Office's numbers, it looks very serious in terms of where we're going. In any case, healthcare consumes far, far, far too much of our GDP and delivers far, far, not so much that it delivers poor services, It's just that the health of the country in general is not going in the right direction. So that kind of summarizes where I am. I don't think Cathie picks up on that particular theme. And so in general, she's pretty optimistic. I don't know how you feel.
Well, I think I look at, of course, Elon's words because for some reason he has this ability, this crazy, amazing ability to focus on a subject matter and in a very short period of time come up with solutions that nobody's thinking about.
Yeah.
And his focus right now apparently has, now that he's been really focused on it for several months, his focus is changed his view a little bit, and he says that $2 trillion in cuts is probably just aspirational, and that might include some of the things you're talking about in healthcare, Social Security, et cetera, which could be done, but would take massive amounts of congressional agreement in order to get there. Whereas he's now saying that the $1 trillion cuts, that's something he thinks is in, not just aspirational, that's real.
Yeah, and I'm more aligned with that perspective, but I do think that there are some magical solutions to the healthcare. And here I'll just
plug your show. No, I want you to plug your show.
Put my show. I have an interview of my latest guest on the Maverick Mind. And he has some really, really workable solutions, which I'm going to try and put in front of Elon on how to fix the healthcare crisis, because it's not just financial; it's also quality, and it's lifestyle quality as well. But that's a separate issue. But in terms of the healthcare costs and healthcare quality, he's got really, I think, very, very workable solutions.
And that show is going to drop on Monday. I think
I'm definitely hoping on Monday. I'm in the hands of the producers of the show. They've got the editing and there's and so that should drop on Monday, but hopefully on Monday.
Okay, all right.
And it's on 𝐒𝐮𝐧𝐝𝐚𝐲's channel, so that's where to look for it.
Right. Okay, well, let's go ahead and dig into it then, Larry. Let's see how Cathie spun her story this week.
Yeah, and I would, just repeating what you said already, I would strongly urge people to go and listen to her directly, because this is just our views. I think her views may have a little bit more credibility than our own.
But they should do that after they finish with this video.
Yes. And hopefully we will color their thinking. So
there you go.
This is an important slide that she produces. I think this is generally the first slide that she shows. And it shows the federal budget deficit or surplus as a percentage of nominal GDP. Well, there really have only been two surpluses in the last 40, 50 years.
Right.
Two surpluses in the last 50 years. And so you have to go back a long way. The last surplus was back in 2000 to 2005. But it was a
no, it's a 1990s, Larry. It was 1995.
Well, no, actually, the surplus crossed the
was it
chasm in 1998.
Okay, yeah. So it was under Clinton, along with Gingrich, they were the ones that accomplished it. Yeah.
Yeah, and I attribute a lot of that to the work that that was begun in the Reagan years. Reagan was he was gifted a massive deficit, or the road to a massive deficit.
Yes. Oh, yes.
And just shows you how difficult it is to move the
ship,
the country around. But by the time Clinton came into power, we had this incredible return to this enormous burst of productivity arising uh, from the computer revolution, or I should say the desktop revolution, the PC
and
revolution.
the internet. Yep.
And yeah, and the internet arrived in 1995, 97, 98, and everybody had desktop computers and or even laptop computers at that point, or at least luggable computers. Although I guess we have laptop computers by 2000. So it was a time of enormous growth, and it was kind of a reflection of all that had been done in the Reagan years, and then of course the turn. But it was very sudden. It came upon us, after what was almost what was quite a serious, recession, and then it disappeared. So, if you go back to the early 60s, you get this burst, and then you have the Vietnam War, and then you have, Reagan slashing the budget, and then you had this climb up to the top, and we also reached, I think, the height of, in terms of our, the family size, the number of families, it all made a huge difference. And the population hadn't started to age.
Right.
The baby boomers were at the height of their productivity. So everything, conspired to improve things dramatically. And we've been on a pretty strong downward spiral ever since.
But the COVID, of course, created this massive disruption, as we all know.
Yeah.
We've heard it.
I would kind of ignore these
right.
bumps, in the road.
But now we should be normalizing, but in the course of normalizing, this problem has become historically, again, you look at the chart, we are still seeing the percentage of deficit as the worst over a 54-year time period.
Yeah, you'd have to go to the global financial crisis back in 2009, 2010 to see anything like this. And that was very briefly, but here we are, if you take this line down, it's pretty clear where we were going. So it's really tough to see the green shoots here. But Cathie sees it. It's interesting. She thinks we're going into this period of enormous evolution of technology and productivity. She speaks very optimistically about the future from the perspective of all these great changes in technology, and so hopefully she's right.
Yep.
I think that the bigger problem is demographic for us. I think the demographics are against us. In a way, it may not matter if the humanoid robot really comes to pass, if AI really comes to pass, and all these gigantic, changes from a technological point of view and technology evolutionary point of view take place. So hopefully she's right, and my pessimism is just my grumpy old age. So the US dollar index is an amazing number. I had to do a double take when she showed this morning, because I remember going back 50 years thinking the dollar was done.
Yeah.
And every 10 years or so, you think, oh, the dollar's done. And yet look where we are today. You got to ignore this kind of peak when, Paul Volcker really slammed on the brakes.
Yeah.
So many third world countries really, really took a dive. But if you just look where we are now, the dollar remains world's premier currency. It is the international means of exchange, and it has, gone through all these ups and downs that we've been through these many years. In fact, most of my life, all my life. So, the yen was supposed to take over, the yuan was supposed to take over, nothing, the euro was supposed to take over. Despite all of these challenges, the dollar remains king.
And of course, what that really means for everybody listening is this is a great time to travel internationally.
Yeah, it is. It is. If you keep your head down and you don't speak American, and you know. All right. So the money supply versus inflation. So this is, of course, the slide that I always say, well, that's fine, but we've got to talk about the velocity of money.
Yep.
Because inflation is not just the money supply, but it's also the velocity of money. I understand the velocity is supposed to be turning up now. I haven't actually done the numbers. But here we see that the money supply we have leading by 2 years. So even though this is where we are today, we're showing it as 2026 because that's when it's going to impact us, right?
Right.
So we see that it's turned up, and we see therefore the inflation rate is beginning to turn up. That's the CPI inflation, which is this scale here versus the year-over-year percentage change. I'm kind of lost here. Which is the which?
So the CPI is the green, and the
Yes.
M2 is the purple.
Yeah, because it's delayed. Yeah, correct.
Right.
So it's turned up quite considerably since it reached the bottom.
Or
Cathie tells us that,
the projection of,
that V2 is going up quite significantly. So I don't know. It's hard for me to see how inflation is going to moderate given this particular diagram, but the correlation is not that powerful, and it does vary from time to time.
Yeah, and again, my hobby horse on this one is productivity, and there's absolutely no doubt that productivity, I mean, just mathematically, if you get great productivity, it will impact inflation.
You're right.
So go ahead.
Yeah, no, you're absolutely right. And I think there are many, many factors hitting the inflation, and so the relationship is not tied entirely tightly. And this is your hobby horse, right?
Well, I don't even consider it my hobby horse. It's kind of the opposite. It's kind of Cathie's been talking about it, as she said, since she started her podcast. She talks about this inverted yield situation, and we can see the correlation with the inversion and recessions. And it's pretty clear that it's not necessarily, whether it's causative or not, it's correlative. And yet this time, no. And so what happened differently this time, where we went so inverted for so long? Now we've come out of the inversion and we're back to a normal spread between the 10-year treasury and the 2-year treasury. And why did this time did we go through this inversion for this protracted period without the impact? And
well, I will add that the impact normally comes a little bit after the inversion reverses.
And yet we now have the reversal for a few months now. And
yeah, but if you go back to 2008, look at that. Look at that gap.
Right.
And that gap is maybe a little bit longer, but look at this gap here.
Oh, yeah, yeah.
And look at, so the correlation is not exactly always the same, but you're right. I mean, if in fact economic activity is picking up, as Cathie tells us it is, and as there are many other signs that it is, then perhaps we've ducked this recession this time. But it's been a long time since, I mean, they called a recession in 2020. It
Right.
was
Right.
blip, literally a blip, and it was related, I think, largely to the pandemic. But it's amazing how this is almost a mathematical certainty, and yet, and look how slightly we went negative here, and we had this very brief recession, and yet look at this.
Yeah. Yeah.
And normally you'd expect to see that recession right here. And I, for a longest time, felt that we were heading towards a serious recession, and I've been proven perfectly wrong.
And I have to admit that while I got it right in 2023, that I was predicting at least a flat line and probably a dip into recession in 2024, and I got that wrong too.
Yeah. So now we look at the 10 and year and 2-year Treasury yield history. And
What she did here was she blew it up, Larry, is she said, let's make this a little clearer. Yeah.
Yeah, and so what we're doing is we've expanded. Actually, it's the same period.
Yes.
But is it the vertical axis that she's added?
No, what she added was she's showing the 10-year Treasury separated out from the 2-year. It's not.
I understand. Yeah. So in other words, not just showing the gap, she's showing both of them.
Right.
Yeah. It's interesting. It's still as puzzling this way as it is,
Now, there is a possibility, to your point, that we haven't really 100% cleared this reinversion.
Yeah.
There is a possibility, based on one of her slides, which we'll get into later, in terms of full-time non-government jobs, it's not that great. And services are great, but as she points out also later, we'll talk about it, is small businesses are not doing great.
They're really struggling. They're really struggling. And
it's
not just small. She says small businesses are struggling, but it's not just small businesses.
Medium business.
Public companies, with tens and hundreds of millions of dollars of revenue that are not doing well. So it's small to medium businesses.
Yes, and in particular in manufacturing and things related to products as opposed to services. Yeah.
To molecules.
Yes, molecules. Yes.
So this is the yield curve in the early 1990s. I think it's more of the same, actually. You see this dip here.
Again, she's blowing it up again to kind of show us
this period.
What happened during this productivity period.
Yeah. And here you see this incredible, the gap reached 2.5% here, which is kind of close to where we're at, right?
Mm-hmm, mm-hmm.
And, amazing. These financial correlations are so difficult to pin down because there are so many other variables that really apply, so that you have to be so careful about taking these broad laws, or LORES rather than LAWEW.
Yeah, and again, I hate to push on it all the time, but Cathie does also. This productivity thing is important. Brian Wang and I were talking last night about the up until like the 1900s, annual productivity was under 1%. Sometimes it was, and for centuries, it was 0.1% in terms of productivity gains. When we got into the Industrial Revolution, all of a sudden we started getting into the 1s and 2% per year. And what you saw, of course, was this amazing wealth, amazing increases in human capability, the elimination almost entirely of poverty now. So you going into this new era of productivity, we could be looking, instead of 1 or 2 or 3% per year on the high level, we might be looking, Cathie thinks we might be looking at 6 to 10% per year of productivity increase. She doesn't say that today, but she said it in the past. And this could be just explosive, change everything.
Yeah. And the question is, how does that wealth get distributed? Because if you think about, the middle market companies and the smaller companies struggling, what happens to them in this explosion of innovation that she talks about? Does this explosion of innovation enable them, or does it cripple them even further? And do we get even fewer companies forming an even larger percentage of the total?
Yeah, the long-term result, Larry, almost certainly means greater wealth for everybody, even if it means disruption on a major scale in terms of how we get there, just like we saw during the Industrial Revolution. So there was a huge amount of disruption. 90% of the employees were people were working on farms in the 1800s. In the 1900s, 10%. So you have maybe one of the most disruptive periods ever. We might have a disruptive period like that again, and it might be
Yep.
very, very troubling to large numbers of people. But at the end of the day, the wealth of what we have today as a planet is incomparable to the wealth that we had in, say, 1890.
Correct. And the question is, does it become even more concentrated? So
Yeah,
what happens to the, the South, the global South, I mean, do they get further behind?
I actually think that the global South, if you will, the equatorial Africas of the world, get to the same level of wealth, if you will, as our current middle class, because they'll leapfrog, just like they leapfrog with their smartphones. They didn't have to go through phones and then better phones, and they went to smartphones directly. Um, you won't have to go through, um, you know, lower levels
You
of
won't have to evolve through the layers that we've had to evolve.
you get to leapfrog it. And
Yeah.
you look at Singapore, you look at South Korea, you look at Japan. Those places practically didn't exist in 1950. They had been destroyed by war. They were, you know, Singapore had been destroyed by 500 years of war, and now they're three of the most advanced countries in the world with the safest. Uh, uh, Incredible, yeah, in 70 years.
Well, I think there are two ways of looking at it, and I think both are true. I think we'll see, countries evolve directly to, a highly advantaged society, but we'll also see other societies that can't make that leap. And I think that spells trouble. Those countries do spell trouble. All right.
Yep.
So then we get the University of Michigan study and what they're anticipating, and they're sort of converging on the 3%. So what are these different numbers? So the University of Michigan expected change in prices during the next 5 to 10 years, and University of Michigan expected change in prices in the next year.
Right.
And they're all converging on the 3 and a bit percent.
But the key here is that the University of Michigan, at least, and I'm a little bit suspect of the University of Michigan. I feel like there's a political thing going on here with them. So I'm going to suggest to people, if they're interested in this at all, watch out for the consumer confidence numbers, which will come next week, I believe, to see the difference, because recently they have been uncorrelated. They have been as far apart as they've ever been in history. And usually Cathie shows that, but I think the timing was different this time or whatever. So watch that for next week. But also, if you take these at face value, what we're seeing is a drop in confidence by consumers, not about their current situation, They're perfect. They think that things are really good right now for them. But as they look forward, they're nervous. And that's not totally to be, that's not so surprising when you have a change in government. And I think if you add to that, there's a lot of chaotic aspects to the economy right now, which are uncertain. Uncertainty about AI, uncertainty about robotics, uncertainty about self-driving cars. People are like, what is that going to mean for me in the future? And so I think that's part of the uncertainty. This is specifically with regard to inflation. And what Cathie was trying to point out was inflationary attitudes about these are consumer ideas. What do we think is going to happen with inflation? Well, short term, they're saying it looks like it's okay, but long term is at one of the highest levels ever. That's the green line.
Was nowhere near the 1990s. So
No, but I'm saying when I say ever recently, how's that? That'd probably be a
since
better
2000. Yeah. Unemployment level, permanent job losses. I mean, it's running at a pretty low rate, but it's climbing, and I'm not sure this is really reflective of what's happening out there right now. I think people are very nervous right now.
Yeah, I think the All In podcast, guys, not this week, but last week, we're talking about in the tech world in Silicon Valley, people that are losing their jobs because of AI already, finding it very hard to get a similar job, that they're having to take pay cuts, that there's not a lot of jobs out there for these skill sets. And so I think this permanent job loss is showing up in other data as well. And so it is, I think, something that definitely should be watched.
Yeah, yeah. It's the first time that software engineers in a decade are facing difficulties.
Right.
US net income, non-corporate divided by corporate. Wow, look at that.
I know.
Yeah. That may be the most
Yeah.
dramatic of all of these slides, right?
Larry, I think that we should take credit where credit is due. I do think Cathie was saying it about the same time, and she might even said it first. You and I started talking about the two economies 18 months ago.
Yeah.
I think 18 months ago, there's two economies, and that turned out to be true on two levels. One is the under 100,000 a year person versus the over 100,000
I
a year
think we
person.
talked about this even during the pandemic.
Even during the pandemic, maybe.
Yeah.
And
Yeah.
then there's also the small business versus the big business, and the manufacturing world versus the services world. So we've got this ripping.
Yeah, do you remember there was that tremendous drop
Yep.
just at the beginning of the pandemic? And then it came back, but we were very skeptical of that.
Right.
And then right after that, it just dropped. And it hasn't really recovered at all. I mean, there was this blip earlier in 2024. But look at where it is now. It's pretty bad.
Yeah. And I think it's being reflected in all of the stats, whether you're talking about, I think she talks about in a minute, the S&P 600, but the Russell 2000 has never hit an all-time high. The small business, the NFIB report, which I realized this morning, I don't remember seeing it. I thought it would have been out this week, but I don't remember seeing it. Maybe it's coming out next week. But the NFIB, the small businesses are not seeing the same confidence levels that we're seeing elsewhere.
Yeah. And they're a very significant part of the economy.
Very. 60, no, I better not quote because I can't remember right now.
The significant anyway.
Yes.
Yeah, here she gives an example of the S&P 500 versus the S&P 600. This is the large companies, the smaller companies in the S&P. I would say one thing, that if she included like private companies,
Mhm.
it would be much worse.
Mhm.
In other words, the S&P 600 are really, from the small businessman's point of view, business person's point of view, they're very big companies.
Right.
They're in the $100 million range. Small businesses are right down in the $10 million range. It's the small businesses that are hurting right now very badly, even though these guys, are down 50% in stock market value, but they're still profitable. I think that if you go down to the small business, that is the, non-public companies, the non-listed companies, I should say, I think you will find they're down in terms of earnings per share or earnings down significantly higher than 50%.
Here's the interesting thing, though, Larry, and this is where I feel like I'm maybe in a unique position to talk about it. My client base for the last 16 years has been even smaller than that.
Mm.
It's been the under 10 employee, under 100 employee businesses, like the business I ran was under 100 employees, well, right at 100 employees. Um, but what I saw with those companies is they are so well situated. They own their home, probably outright. Their spouse is working. So they got their health insurance covered. They've been running a business for a very long time now, so they know what to do in most circumstances and how to moderate. And that's showing up in the NFIB numbers too, in that only 3% of them are even looking for loans. Only 3% of,
Mm.
of the companies in the NFIB surveys are even looking for loans. So it is, I think these people are in great shape that are running these smaller businesses. I would say under 500 employees is the standard for the Small Business Administration. Under 500 employee companies, maybe their earnings are not great, but they're in solid ground.
Yeah, I'm gonna push back on that. I think their earnings are down 60, 70%.
Mhm. I wouldn't disagree. I think their earnings are down. Absolutely.
And
They may be
and
flatline.
the
Yeah.
and the future is bleak. Now, do they have the capital to, employ robotic solutions? Do they have the capital to reinvest in the company? To, go with I think a lot of these companies are going to be very, very hard pressed to keep up with the revolution that's coming.
This
Very,
is
very hard pressed.
this is a completely different subject. But yes,
Yeah.
there's a good chance of that. Yes.
But that's driven by earnings. And
Right.
so that's why I'm focused on the earnings. And you may be correct. And a lot of those people, by the way, a lot of these mid-sized businesses or small-sized businesses that you talk about, those owners are retiring.
Yeah. Yeah.
You don't see a lot of that business, a lot of those companies being formed and created today.
No, I know it's crazy.
Yeah. All right. Well, that's a subject perhaps for another day. The Bloomberg Commodity Price Index. Here we go. I mean, this is just showing that there's been no inflation in commodities at all, that the commodities continually decline, and that's because the business of molecules is not great.
Mhm. Well, and they're getting way more efficient. And I suspect that this is going to be an area where the efficiency is going to just explode with robotics. I mean, when you're talking about mining things out of the earth or farming things, this is going to be a category which is, I think this is going to be deflationary.
That's a good point. That is a good point. This is the slide of the week.
Yeah, no kidding.
Back in 2014, when I sold my company, or the majority of my company, we had a corporate summit, and they asked me to talk. This was back in 2014, so it's what, 10 years ago.
Hmm.
And what did I talk about? I talked about the coming property collapse in China.
Mhm.
And I said, China is bankrupt. But like any bankrupt business, they're going to continue living the high life for some years to come. Because, Hemingway said famously, how did I go bankrupt? Two ways, slowly and then quickly.
Right.
Um, they were in the slow part of it. And I don't think they've even reached the quick part of it yet. And yet, look what happened. The bond yield fell from 20 to 2% down to 1.6% in like days.
Right.
Now, I don't know how they get out of this short of war. This is the kind of stuff that leads to war. First, it could be a tariff war, but then it can be a real war. So I think this is very serious stuff.
Yeah, I mean, Cathie said her solution, and I think the world's also been saying, the headlines have all been saying for 6 months roughly, that the first China stimulus was not enough, the second China stimulus was not enough, that they need to do more. I'm not sure exactly what more they can do. The Chinese consumer apparently is, 75% of Chinese savings are in their property, and the property values have fallen in half. So it's a very difficult situation.
This is what we call pushing on a string. Now,
Yeah.
can they recover? Yes, they can recover. How can they recover? They have to focus. I don't think building arms, building a massive army and building a massive air force and building a massive navy is the way to go. I mean, they have such resources. They have such incredible resources. They have such incredible people, and they have such incredible science and technology. But I'm not sure this leader is the right leader for them, and this could be another, like Germany in 1933, it could be heading for disaster.
Well, again, talking to Brian Wang, and people can go back and look at like two or three of the last videos I've done with Brian. He knows the China market really, really well. And what's happening in China is they have, and he actually brought that up in our video earlier today. What's happening in China is you have, because it's a dictatorship, you have the ability of the Chinese Communist Party to plan the economy. And the things that they've done right, they've done a lot of things wrong, but the things they've done right is they are dramatically increasing the amount of energy production, uh, uh, solar and nuclear in particular, because they're not an oil producing country. But they've really, the nuclear that they're putting in right now is incredible. They are not falling, as Cathie pointed out, they're not falling behind on AI. Their latest AI, their latest large language models are working quite well, even though they are not as able to use NVIDIA chips. They are still doing fine in their latest large language models. So there's a bunch of different areas where they're focused, where they are world leaders, cars being one of them, where they are leading the way, and this might be how they get out of it.
Well, they've been in this technology leadership position ever since 2014. And just look at the
Yeah.
trend.
They so overbuilt. They so overbuilt their real estate. It was the stupidest thing. 60 Minutes.
And they lend all this money out to all kinds of countries to build all kinds of infrastructure.
Yeah.
Most of their stuff has turned to, it's not been a good result.
Right.
So I don't know. I smell war.
Okay. All right. Well, they've got their eyes set on Taiwan. I'm still believing that Taiwan has so many drones that we don't know about. But anyway, that's another subject. So,
So Cathie often shows this, always shows the slide of the S&P price to the gold ratio. I'm not sure that this really sheds much light on anything. We've seen it under stress at times of, global financial crises, when interest rates went through the roof back in 1980, global financial crisis. But in general, it kind of always comes back to a sort of level. I mean, gold hit a very high point in mid-2024, right?
right. Yep.
But
It's almost there. It's almost back there. Yeah.
Yeah. But I think it's in this range here.
Right. Yep.
Because the S&P has gone up, pretty high. S&P.
What her concern was here, Larry, and a lot of people's concern, is that the S&P cannot sustain 20+% 2 years in a row increase. Seems unsustainable. Well, it's never happened 3 years in a row. So, or maybe once. I think maybe once it happened 3 years in a row.
Yeah, but most of that action is concentrated in a handful of stocks that are in the midst of this gigantic revolution.
Right.
Now, this could be another internet bust.
Don't think so.
Well, they didn't think so, in 2000 either.
Yeah, but Larry, you must have looked at things in the late 1990s and gone, who is putting up the monies for these stupid ventures?
Randy, in June of 1999, I sold my company.
Good timing.
Yeah. That tells you
that,
I looked at the stock market in June of 1999. I looked at what was going on, and I thought, if I don't get out now, it's going to take a decade for me to get out again.
Yeah. But what you saw then was these stupid .com names that were coming out and getting valuations of $1 trillion, $1 billion.
Well, look at the valuations we're putting on these, on these companies that have large language models. Think about those valuations for a minute. I mean, $400 billion for a company that is yet to turn a profit, and it's talking about having to need
Yeah. You're talking about OpenAI, I guess.
As an example. They are the ultimate example. And we'll look back at this in 10 or 20 years' time and say, what were we thinking?
You could be 100% right, yes.
Look, it's more than possible that large language models are going to lead us to general intelligence. But I don't believe that's the case. I think large language models are fool's gold to a degree. I think, they're probabilistic, and they're extraordinarily good at that kind of analysis, a probabilistic analysis. And they're very good, by the way, at coding, because coding has got such stringent rules that they're forced to comply.
Right.
But I think that the time is coming very shortly where we will discover that deterministic models can be as accurate and as good as probabilistic models. Remember, the transformer was not a very functional solution up until about 6 years ago, 7 years ago, 8 years ago. It had been around for 30 years.
Right.
The theory of it's been known forever. I mean, more than 30 years, but the functional transformer has been around for 30 years and only began to make sense when we had the kind of compute power to build these very large transformers. And then we learned some tricks as well. But in general, the transformer has been around for years. But if you go back 20 years, people said about the transformer, well, it's going to require so much compute power that it almost doesn't work. But I will remind everybody that 30 or 40 years ago, we were trying to build expert systems to understand the entire universe, the whole world, the universe, and everything. and we found that we just didn't have enough compute power. That's a very similar story to the transformer. Now we've got compute power. So I maintain we could probably build deterministic systems as powerful as
I see. Yeah.
probabilistic systems,
Gotcha.
and with dramatically less compute power.
Yeah. Yeah.
And so what I'm saying is that I don't think we've seen the end of this revolution. In fact, we're only at the beginning of this revolution. And I think sinking these gigantic sums of money into these gigantic computers may not be the solution. They may be part of the solution. They may be an important component of the solution, but they're not the solution. And when the solution does come, I suspect companies like, OpenAI are going to fall of their own weight. Anyway, that's my view.
Okay. Yep. I hear many others who, I haven't heard that one before, that we might go trending back towards more specific kinds of coding again, but I can understand what you're saying. That it makes,
well, it happens to have been my
specialization, right? Yes.
Okay. What do I know?
No, I don't know. I think that's why we have you on the channel.
And then finally, we get to the Bitcoin to gold ratio, which is very interesting. If you're interested in Bitcoin.
Right. Well, I think, Larry, the key here is, to me, is Bitcoin does matter. It is one place where people are putting their assets. And so in past, you would have treasuries, you would have gold, you would have equities, you would have commodities. Those were the places where you get real estate. I mean, there's, things outside of the traditional, of the index markets, but there's places where you could put your money to have a storehouse of value, or to put it when you're afraid that things are going south, or when you want to get a burst of potential out of your cash because you think things are going well. You had all these options. Well, Bitcoin is one more option. And whether it's a good option or a bad option, it is drawing money away from other options that money could be going into. And I think, if nothing else, it needs to be part of the total way that we analyze it because of that.
There's no question that humankind needs a better store of value than gold, because the supply of gold has not kept up with the growth of commerce by any manner of means. And Bitcoin could well be that answer, although Bitcoin is based upon a technology that is rapidly aging. And so the question is, what happens, when we're able to solve the Bitcoin security protection, not solve, but we're able to penetrate the security protection of Bitcoin.
CERN says he has the answer to that. He says if people have the sophistication to be able to get into Bitcoin's protective, what do you call it, their algorithm, or what's the word I want? Encryption. If they can get into that, they will have already been able to get into all of the U.S. Military. They would have been able to get into.
That's not entirely true, and I'll tell you why it's not true. I've heard that theory before, and here's the reason it fails. As technology, encryption technology, or the ability to penetrate encryption technology improves, so we're able to evolve the technology because we can use the very same means to encrypt as we used to decrypt. So we always keep ahead of the game. Bitcoin, on the other hand, the value of Bitcoin is that it's based upon these immutable, or what we thought to be immutable algorithms of the encryption. Now, the question is, can we change the Bitcoin encryption? Well, that kind of begs the question. If we do change the encryption, what happens to all the guys who have Bitcoin already, using the old encryption? Do we have to fork, the chain? Does the chain stand? And everybody, it's kind of an ugly question. And I'm not sure how they've addressed it, but I don't know much about Bitcoin, as you can probably hear. And so, but I'm very wary of I'm wary of a currency that's based upon a technology, because technology, definitely evolves.
Right. That's
so. The problem with gold is that it hasn't evolved because, there's this very limited supply, and who knows what happens. I mean, we know what's happened. The economy's expanded dramatically, but gold price hasn't gone up very much,
Right. Is that her last slide, or did
I think
you said
so,
you said the word finally? So I was thinking that was the
yeah.
All right. So after you've now watched her program twice, I've watched it. We've now gone through the slide set and discussed it. Are you feeling any more optimistic?
Look, I'm more optimistic with having a Trump administration than I was having a Biden administration. I really felt that Biden was asleep at the wheel, and indeed he was asleep at the wheel,
Yes.
quite literally. I didn't agree with many of his policies. I didn't even agree with his Ukraine policy.
Yeah.
You either got to support the guy, or you got to, abandon the guy. You can't, well, we'll give you this weapon and it may do this, but you can't do that. And you can do, I mean, that is such bull.
We didn't learn anything from Vietnam.
Exactly. I had this picture in my head of Lyndon Johnson phoning his support team and saying, should I bomb this factory or maybe we better avoid this factory because there's anti-aircraft missiles and we may hurt Russia. I mean, he was telling his generals what they could do and they couldn't do on a tactical level.
Yeah.
And this is what it's felt like to me.
Yeah.
You want to win a war, you win a war. You can't win a war in millimeters. You can't win it even in meters. You have to win it, the whole half. And he wasn't able to do that.
Yep.
And Europe was worse.
Larry, if there's anything on my list of hopes for the Trump administration in the early days, he has set up his meeting with Putin, or is setting up. Apparently, Putin called and said, "Yeah, we want to have a meeting." Man, it would be cool if they could find a way, and we'll see how that evolves over the next few weeks.
Yeah, it's going to be tough, very, very, very tough. But if anybody can do it, I just hope they bring Jared in to do it. I think
that's right, exactly right.
I think Jared could actually pull this thing off. He hasn't been given a role.
No.
Unlike last time, he was given a role, although he's been around.
I would think he would want to come back and finish the Abraham Accords. I would think that
would think so.
In his head, that would be like.
They've got some of the guys from the Abraham Accords back in their old roles, but not Jared.
Yeah, well, it's gonna be Larry. This is gonna be a year that I will be glad that I am a chronicler. And I
hope you're right.
And I'm super glad to have you along on the ride. So
I'm not as optimistic as you. I'm fairly optimistic. Okay. I'm hopeful, not optimistic.
Okay, let me put it. I'll put it to you a way that I think you'll agree with, and that is, it's going to be a year to remember. I'm not sure whether it'll be good or great or completely.
But we should memorialize what Cathie says, and I hope people go and listen to her because she says it much better than we can say it. But she believes that we're on the cusp of this massive wave of innovation. And she, ARC does detail out these various themes of innovation that she believes in. And, they include robotics, they include AI, it includes multi-omic, as they call it, the confluence of AI, molecular drug, discovery, and curing, not treating disease.
Right, right.
Very high on the idea of curing disease, not just these long-term treatments that the drug companies eke out over years. And they think that, it's going to be an incredible decade of innovation, and that's going to drive enormous productivity. Definitely, she's aligned with Elon Musk and
Tony Seba and Diamandis. I never know how to pronounce his name. Peter Diamandis. Yes, Peter.
Yeah, something like that.
Something like that. Yeah, well, we'll see what happens. Like I say, I think just being along for the ride will be fascinating in itself. So,
yeah.
Larry, as always, thank you for coming in once a month and helping us to see what we can add to, or at least report about with regard to Cathie's employment numbers. And I guess depending on when that rocket takes off on Monday, we may or may not see you at the regular time on Monday.
Yeah, it's going to take off 5 p.m. Eastern, 4 p.m., at least planned to take off 4 p.m. I've been looking at the weather, and it's marginal. I don't know about the high altitude winds, but the winds at ground level are very marginal, and you have to think that the upper level winds are worse. So tight. And I can't stay beyond Monday. I have to get on the road at Tuesday because of commitments. So I'm a little frustrated right now.
I guess so. All right, Larry. Well, we'll see whether we see you on Monday. Barring that, we'll see you on Friday. Thanks again for being on board, and to all of you out there, it has been great talking to you.